Thank you for tuning in for the last video of 2023. We got a lot to unpack here. We will be going through the companies I bought, the companies that pay me a dividend, full portfolio update, reviewing my 2023 achievements, and setting this new year goals. Remember that I do these updates monthly, so if you don't want to miss future updates, make sure to hit the subscribe button. Let's dive in. For the month of December, I only bought 4 companies: Texas Instrument 0.47 shares, Kroger 0.56 shares, Pepsi 0.14 shares, and Hershey's 2.01 shares. Hershey's is a company that I simply cannot ignore. I love the brand, I love its fundamentals, and I really see this company flourish for decades to come. If you've been following this specific company, you've seen that it has dropped quite a lot in share price. The tailwinds are temporary in my opinion. Increased cocoa prices, increased capex, and the Ozempic introduction. They do pose some sort of risk, but I don't see it as something that will destroy this company. Moving to the companies that pay me a dividend in December, we got Visa $1.05, Kroger $4.74, J&J $7.23, Home Depot $2.62, Hershey's $9.87, Stag Industrial $1.49, Realty Income $5.25, Waste Management $2.91, and Coca-Cola $1.48 for a total amount of $36.65. This dividend received is 100% passive and is manually reinvested into the best opportunities I can find. Comparing every December since 2020, we can see the consistent growth of this month, going from $4.67 all the way up to $36.65. When we zoom out, we can expect the same consistency and growth. This is all the dividends received every year. In my first year of dividend investing, I only received $23.67, which is not a lot, but the important message here is that it continues to compound. $90.55, $208.01, and in 2023, $396.29. From 2020 to 2023, all I did was to continue depositing into the account and gradually increasing those amounts as I became debt-free, reinvesting dividends, and the most important, staying consistent. No matter what happened, I stayed invested and will continue to do so for the coming years. So if you're thinking of starting to invest, this is the sign. Start investing now. Even if it's $1, $5, or $10, invest and stay consistent. Bonus points if you track your portfolio with a spreadsheet, because investing starts very slow and you could get discouraged for not seeing massive changes. Tracking early will allow you to see those pennies compound. Moving to my portfolio, it's currently valued at $17,039.48 plus $202 in buying power. It has a dividend yield of 3.06%, which translates to $468.97 in projected annual dividends. The portfolio is diversified with 22 holdings. Performance-wise, I did not beat the market, and that's fine. I had companies that were holding the portfolio down like 3M, AT&T, and Corning. After selling those companies, the portfolio started moving in the right direction. 7 companies moved the entire S&P 500, and if you're not invested in at least 3 of them, then your performance will have a huge difference versus the market. Focusing on the 1 year or year to date is the same in the end of the year. The S&P 500 had a total return of 26.29%. My portfolio only returned 3.89%. Beating the S&P 500 surely brings superior portfolio returns, and selling the winners will allow you to lock those gains and invest them in better companies. Now, beating the S&P 500 on a consistent basis is difficult. As long as my dividend income grows and cover all my expenses in the future, then I'm pleased with the results. Looking at the 22 companies I own, we can see a lot of blue chip recognizable brands like Pepsi, Coca-Cola, Colgate, Nike, Clorox, and the list goes on. It is a combination of steady, slow growth businesses and fast growing compounders. Hershey's is my largest holding by 12.4%, and I have repeatedly said that I just can't ignore not buying this company. I see Hershey's as the same scenario as my second largest holding, Starbucks. Even though both situations were different for both businesses, what they had in common is that the fundamentals were not heavily deteriorated. Sure, an increase in cocoa prices could squeeze margins from Hershey's, but they also have the power and brand value to increase prices and mitigate the squeeze. Continuing to my second holding, Starbucks 7.4%. Just bought this company in large quantities when it went down to the 70s and the 80s. So after it recovered, the stake grew. And for the third spot, we got a tie with Digital Realty Trust and Texas Instrument, both amazing companies. Digital grew because I bought it at a discount. Then the position recovered and it just keeps going up. On the other hand, for TI, I've been dollar cost average due to the latest report of free cash flow compression, which it was reported a long time ago but took effect now. Now I am showing you my portfolio from a different perspective, how many shares I got in each position, so you can appreciate the variety of amounts in the portfolio. Also showing you the sector diversification, extremely heavy in consumer defensive. This is a sector that has slow but stable growth. In order to see massive capital gains, I'll need to increase my tech sector. Annual dividend per holding, we can see some big players like Realty Income and Hershey's. Most of the companies in my portfolio pay me at least $10 in dividend per year. Almost every company in this portfolio raises their dividend every year. This means that if I ever stop investing, my dividend income will continue to grow. So right now, the continuous deposits into my account, dividend reinvest, and dividend raises bring a 3x contribution to the growth of my dividends. Now we have the average cost versus capital gain or loss. This graph is easy to understand. In blue, we have the average cost, and in gray, we have the gain or loss. If the gray is above the blue, it means the position is at a profit. If it's under, it's at a loss. Right now, I only have 6 companies in the red, Hershey's being the most notable one. The other 5 are just barely in the red. The rest of the holdings are in the green or in profits. The graph is just for representation purposes. Being in the red doesn't mean that I will automatically buy the company. There are other factors that I put into analysis to determine when to buy. Last, we have the total return. Same as the previous graph in terms of capital gain or loss, but this time in percentage. It's a more accurate way of seeing the magnitude of the return. Talking about Hershey's again, in the previous graph, it looked like it was in a massive low. This graph shows that it's only down 13%. The other ones in the red are 5% or less. So it's not like I'm massively losing money on all holdings. If we factor in all the dividends they pay, even though it's not dripped, the loss is less than what we see. Overall, I like the performance of my portfolio this year, and as we enter 2024, I expect to remain with the same consistency of buying quality companies and weekly contributions. Now, let's take a moment to reflect on my goals. On the left, we have 2023 goals, and to the right, 2024. In 2023, I set the following goals: $15,000 portfolio value, $600 in projected annual dividend, and high grading the portfolio. I did achieve more than $15,000, so we beat the goal by $2,000. For the projected annual dividend, we fell short by more than $100 due to the sale of high-paying companies earlier this year. And last, high grading the portfolio. I sold companies that were holding me down. And with that money, I bought high-quality ones like Pepsi, Visa, ADP, Texas Instrument, and Hershey's. So out of all 3 goals, I achieved 2 of them. Looking forward to 2024, we're looking for a $22,000 to $25,000 portfolio value. We remained with the same projected annual dividend outlook of $600, and this year I want to increase my stake in high quality companies such as Visa, Automatic Data Processing, and start a possible position with MasterCard, Microsoft, and United Health Group. The last goal is more of an investment in myself, to continue investing in my health by going to the gym and eating healthy meals, to have some sort of a side hustle that can bring me some extra cash and reinvest those profits in myself, and last, to be more present, enjoy the now, spend time with friends, family, and nature. 2023 was a great year in every aspect, in and outside investing, and 2024 will be better. I wish everyone a happy new year, a year full of health, peace, and prosperity. Thank you for watching, and I'll see you in the next one.